Hello and welcome to the Smart Investor Special Bulletin. Inflation for June 2012 has come in at a lower than expected rate of 7.25%. So has this figure set the stage for a rate cut in the upcoming monetary policy review by the Reserve Bank of India in July end? Should you buy interest rate sensitive stocks given all this? Smart investors Puneet Wadhwa spoke with Thunuguntla, strategist and head of research SMC Global Securities, on his interpretation of this economic data released today and the near to medium term outlook for the markets. And here is what he had to say.
So the inflation for June 2012 has come in at 7.25%. So is this in line with your expectations?
No, even lower than the expectations. Very convincing numbers. I think it gives absolute headroom for RBI to cut the rates. I think if the RBI doesn't cut the rates from here on, I think it may appear that they are getting little out of touch with the ground realities. I think they are getting little too much inflation oriented and forgetting the growth completely. So I think 7.25% is a good number, and if one expects that if the inflation slips below 7%, I think that gives much more headroom for RBI to cut the rates aggressively.
So what is your estimate of how much the RBI can cut rates in the upcoming review and in FY13?
At least 25 basis points in the coming meeting, if not 50 basis points. I think in the remaining part of this year, one can expect 75 basis points.
So what are the upside risks to inflation right now?
Rupee weakness.
Okay, and how much of a concern is monsoon at this stage for you?
It is a concern. It is a concern, but nobody has control on that. So why to worry about something on which you don't have control?
Okay. So what is your interpretation of the food and fuel numbers that have come in today? Do you think that the government will go ahead with the diesel deregulation post the presidential elections as the report suggests?
I think it will. It may not be complete, but partial at least.
So what kind of a deregulation do you see in terms of how much leeway does...
at least 5 rupees per litre to start with.
Okay. Sir, given all this, what is your outlook for the bond yields and the rupee in the near to medium term?
Rupee doesn't have any link with the inflation.
Yeah, I know.
It's other way around.
I mean, so, yeah, I know, but just on a macroeconomic parameter.
That depends. If the inflation cools, FI money will come in. If FI money comes in, rupee will become stronger.
Okay, so given all this, how do you see the market panning out in the near to medium term and
higher probability event is market going up. In markets, you will never have a 100% probability scenario.
Okay.
Always you have to deal with the high probability events. The high probability event is appearing to be market going up rather than market coming down.
Okay, so would you be a buyer in interest rate sensitive stocks given all this?
Absolutely.
Any specific stocks that you would like to highlight?
Banks.
Banks?
Yeah.
Private or PSUs?
Both.
Okay. Thanks a lot, sir, for your time.
Thanks. Yeah.
That was Thunuguntla, strategist and head of research SMC Global Securities, in conversation with smart investors Puneet Wadhwa on inflation. Thank you and stay tuned for the Smart Investor Afternoon Market Update.